Good afternoon, everybody. Welcome to our webinar featuring two very exciting companies. For those of you that do not know me, my name is Gary McCarthy. I'm the head of risk at Spark Crowdfunding. Spark itself is Ireland's leading equity crowdfunding platform. We're delighted that over the last 5 years plus, we have brought 50 or more companies fundraisers to the private market. It's been, I suppose, at this point, we are the largest provider, I would say, of EIS type opportunities for individual private investors. And on the topic of EIS, I'm delighted that the two companies that are presenting to us today are both qualifying for EIS tax rebates. To kick things off, I'm delighted to have Professor Noel Kaplis and Dr. Holger Mueller presenting for ProVascTec. ProVascTec is an incredibly exciting opportunity. The product is a cell therapy for lower limb ischemia. In layman's terms, that is dealing with the problem of blocked arteries in the lower limbs, which can lead to, unfortunately, in many cases, to amputations. It is a massive market needing more innovation and better solutions. In fact, it can be, I suppose, calculated at about $20 billion is the opportunity. The team is laden with PhD qualifications, is highly qualified, really impressive team. The valuation of 5.3 million euros is also a very interesting one, given that we have a very well-regarded Dutch venture capital company, NLC, investing 250,000 euros at the same price as is open to Spark investors. And I think just to bring everything up to speed or up to date, there has been some very exciting news for ProVascTec in recent weeks, where we have received news that company has received 2.1 million euros of funding for research from Eurostars, which is part of the Horizons Europe program. Quite apart from Horizons being highly regarded, this is a huge deal in terms of de-risking ProVascTec. It is it is non-dilutive funding, which will go towards helping research with their collaborators in the application, a Swiss and a Swedish research labs. So I think that in terms of momentum, this is very, very helpful, but I will leave the really, really juicy stuff to Noel and Holger now. And without further ado, please kick off with your slides. Thanks.
With pleasure. Thank you so much for the opportunity to present here. My name is Holger, and as we start our presentation with a technical overview, I would like to immediately hand over to Noel, who is not only the Chief Scientific Officer, but also the inventor of the technology. Noel, the floor is yours.
Thank you, Holger. So the problem we're treating is critical limb ischemia, and this is a major unmet clinical need worldwide, very high incidence. The cause of it is a pathology called atherosclerosis, which is basically plaque in the artery, which is obstructive and causes insufficient blood flow. It's particularly problematic below the knee, as we'll get into, but basically approximately 5 million severe patients in the markets we're interested in, which is US, EU, and Japan annually, 1.6 million interventions below the knee, and 200,000 amputations, unfortunately. Next slide. So we can see that the current treatments are extremely unsatisfactory. So bypass surgery essentially doesn't work for below the knee blockages. And the reason for this is these are very small arteries. They have a poor runoff. So the traditional bypass grafts that we put into these small arteries really don't work because the graft basically blocks off without sufficient runoff. The other approach, which you'll be maybe familiar with, which is use of wires, balloons, or stents, called angioplasty. This tries to deblock the artery by a minimally invasive technique. The problem is that, first of all, it's technically challenging. And when we reopen the artery, there's a very high chance that these arteries, the blockages will reblock. So we have about a 30 to 40% 1 year reblockage and twice that over 3 to 4 years. The last therapy, which is, I guess, the last great hope for this group, is cell therapy. Unfortunately, to date, cell therapy has been dogged by one major problem, which is the cell culture shock problem. And to explain it briefly, when we grow cells in a culture dish, they're grown as a single layer, and we have to disperse these cells when we take them out of the culture dish and implant them in the patient. The process of dispersing the cells into a solution causes a culture shock. So when you put the cells back into the body, most of them die within 24 hours. This leads to a very low concentration of cells at the site of delivery. And these two problems, the problem of getting cells to the site of blockage and keeping large numbers of cells, is what all of our device and our cell therapy approach is about. So if we go to the next slide, we'll show you how we've solved this. So we've taken a very advantageous cell called the mesenchymal stem cell, which is already established in the marketplace as having qualities which would allow it to grow new blood vessels. We're using the cell off the shelf, so it's an allogeneic cell, which will not induce an immune response from the patient. So we can use these cells in any number of patients. Next slide. And we're going to implant them in this basically patent protected device, which this is a membrane where cells can grow in large quantities. But the key is that we can grow these cells in the device in culture and then lift the device en masse out of culture without creating the culture shock. So this achieves two things. One, we retain the cells like they were in culture and we don't have the cell death. And second, we can implant thousands-fold more cells at the site of obstruction, which gives us a much greater therapeutic effect. Next slide. So this is showing how the device would be delivered. Importantly, it doesn't suffer from any of the restrictions of angioplasty because we don't need to go through the blockage. We don't need to reopen the blockage. We just need to park the cells with the device in front of the blockage. This is a very straightforward procedure. And basically, these cells will grow new blood vessels out through the wall and connect up to a natural bypass. And don't take my word for it, but we can show you that we've already done this. So with a different type of cell and an earlier prototype, we were able to show in a large animal model that we could implant larger numbers of cells into a blocked artery in a pig and basically create natural bypasses to recover the so-called limitation in blood flow. Next slide. So this is just showing you that we have the tools and the basic elements of this already available to us. So we have a backbone where we can put the membrane on. You can see the central portion which describes the membrane. And we've also begun to characterize these cells and shown that they have the ability to actually open or at least secrete factors that are likely to open the blood vessel. I'll now hand back to Holger.
Thank you so much. And actually, I would like to pick up where Gary left off a little bit by introducing the team, because hopefully Noel already convinced you that the technology is working, that we have clear proof that we can position large quantities of cells into blocked arteries and that new blood vessels will grow. But going forward, you would like to know who does the job. And this is mainly Noel and myself, and we are highly complementary in our experiences. I worked in the pharmaceutical industry for the better part of 20 years, have been instrumental in pushing many products forward through the development process, and can proudly say that I have brought 5 products to the market, which you can buy today in the pharmacy. I also worked in startups and contributed to raising funds. Noel is clearly a master when it comes to designing R&D experiments and bringing them to the bedside. First in man studies, a key requirement that we will need to plan for when we want to bring our therapy to the market. Now, I hopefully convinced you that we are the right team, but we are not alone. We are supported by a scientific advisory board that complements our experience even further. We have help for medical and the US market, for the logistics and the regulation around cells, and for simply growing the startup and scaling it across our applications. Now, what do we want to do exactly? But before I do this, let's quickly look at the market size that we are addressing. It's not quite the 20 billion that Gary was mentioning, but we are not far away from it. 16 billion is, I think, the appropriate market size. What we are targeting is 7 billion. That is the fraction below the knee. And because we are first to market and we have a revolutionary product, we think we can capture a significant market share from these 7 billion. We think we can generate at the peak about 4 billion in annual sales. Is our product profitable? Yes, absolutely. If we look at the pricing that is aligned with the reimbursement codes of pharmaceutical product, we think we can charge about 4,400 euros per device. And that reflects positively with our cost because we can generate a 65% gross margin, which is in line with both the medical device companies and cell therapy companies' standards. So we think in a possible acquisition, our product would be suitable for marketing by these companies. Now, what do we want to do? Currently, we are raising 1.1 million in seed funding, and we want to deliver the first point of a serious value inflection. Our activities comprise of 3 parts. We at ProVascTec, we develop the pharmaceutical. And as Noel already said, we are using established building blocks, and these building blocks will be provided to us by our partners. The mesh will be provided by our partner in Switzerland, EMPA, who has established manufacturing capabilities for electrospinning. The cells will be provided by our Swedish partner, who has an established manufacturing process for mesenchymal stem cells that even have been in the clinic. So the regulatory risk is significantly reduced by using these partners. And we reduce the capital needs because all the infrastructure is already in place. And as Gary mentioned, the part is funded by European Union with 2.1 billion. So all the proceeds from the seed funding will enable us to drive the development of the pharmaceutical product. Now, what do we plan to do over the long term, which is our investment horizon? We are currently thinking that we can develop the complete product within 6 years. Over this course of 6 years, we will see 4 value inflection points. One after 2 years, which is the so-called CAM assay, which will be the pivotal proof point within the current funding round. Then we will demonstrate that our technology works in a larger in vivo model, the large animal study. At year 4, we will translate everything into humans, first in man study. And by end of year 6, we will be able to submit to the European Union, Japan, and FDA for product approval. What does this mean for you? For you, this means that our capital requirements to bring our product to the market are in the magnitude of 30 million in total. All our capital raising intersections are significantly lower than the valuations that we think we can achieve when we compare ourselves to benchmark companies. You can see the comparison between the fundraising of the company and the valuations at the bottom. And if you ask us what is our long-term plan, then we have obviously 2 exit opportunities. One is we market the product ourselves. It's fair to say that this is not our desired exit. We want to exit in a trade sale. We think each of these value inflection points will give us an opportunity to talk to potential strategic acquirers. And to give you an idea of the magnitude of exits that you can expect from us, it is somewhere between the 300 million and the 600 million based on company valuation, benchmark valuations. And the positioning of these exit opportunities also indicates when we think we can exit. Each value inflection point will certainly provide an opportunity, but the sweet spot, I think, will be around year 4 when we have demonstrated our usability in humans. With that, thank you so much for your attention.
Thank you, Holger. Thank you, Noel. I think I have my colleague Fergal Power on as well to field a few questions from investors. Just a quick housekeeping note that I neglected to mention at the outset, along with the slightly excited 20 billion valuation of the addressable market, was just if you are wanting to put a question to the team from ProVascTec, the hand raising icon on Zoom is not the thing to use. Just put it into the Q&A. And without further ado, I'll just ask Fergal to ask the first question.
Yeah, so just first question in, a technical question, so maybe one for yourself, Noel. Why doesn't the culture have the same effect of rejection as the cell therapy?
Fergal, I'm not exactly sure what the question is. I'm not exactly sure what.
Just regarding, the culture shock, I suppose, in existing treatment pathways, and how does yours differentiate?
Yeah. So why does existing therapy cause culture shock, and why doesn't ours? Is that the question?
Yeah.
Okay. So what happens is that cells, when they grow in culture, they're connected to each other, and they express surface markers called integrins. And integrin kind of tells the cell, okay, this is my environment. I'm with a neighboring cell. I'm calm, I'm okay, everything's fine. Once you disperse these cells, if you put them into a new environment, which is into the body, they have a whole series of new signals. And so what the cell, when it sees an external compound coming into contact with it, its immediate response is, I need to die. And so it goes under what's called programmed cell death. And we've proven this, and many other groups have proven, if you inject or you squirt cells into tissue, most of these cells die if you grow them in culture. However, in our environment, we have them growing multi-layered within a mesh. We never disperse them. We take them out en masse in the mesh, and then we implant the mesh into the body. So the cell never sees a new environment. All it sees is its neighborhood cells are inside this little mesh house, and they never, and we can show that more than 90% of these cells survive. So it's really a game changer in terms of protecting the cells from culture shock. But the other point is that because you protect so many cells from death, you get a much bigger therapeutic effect. But not only that, even more, because we can put it on a device where we can go through an artery, we can get these cells to anywhere in the body we wish to get to. Okay, so this is kind of, and we didn't want to get into this in the talk because we don't want to overcomplicate things, but this is only the beginning. So you can get it to the lower leg, but you could potentially get this to other sites in the body for cancer therapy, for a whole range of other things. But right now, incredibly effective in getting vast quantities of cells locally to a blockage.
Excellent, thank you.
Thanks, Noel. Maybe one for Holger here. That excellent slide. I do like it when I see exits and timelines all together in the same space. But just to reconfirm, one of the investors asking, where exactly are you on the timeline on that slide? And I suppose the reverse engineering of that question is, I see that after the in vivo segment, we're into large animal trials. How far away in months are the large animal trials?
Yeah, so I can bring up the slide, and then hopefully it's a little bit clearer.
That's probably the best.
So we are currently in this phase on the upper right thing. So at the end of our current funding period, we will have demonstrated that it works in the so-called CAM assay. The large animal study will be after year 3. So you can imagine that we are here right at the beginning. So to answer your question precisely, we are about 36 months out before the animal study.
Thank you. Brilliant. Just
unfortunately, it doesn't go any quicker in pharma.
Okay. Fully understood.
Nothing does. I have a question just regarding competition and the patents. So what are the likelihoods of kind of other similar approaches that would compete with ProVascTec's? And would they be infringing on the patents held, or the fact that the given the elements already kind of are FDA approved in terms of the mesenchymal stem cells and the organoid? What does that pose as a kind of a threat, I suppose, or a risk to, from a competitor point of view?
Mm-hmm. So I think for this question to answer, we have to look at two things. Who are our competitors? Competitor number one are device makers. They are excellent in coming up with the new stents, and they think of making the threads a little bit smaller, making the stent a little bit more flexible. They are not thinking, since the last invention, which was coating them with some chemicals, about putting anything on the stent, and it doesn't work with the stent. So that's one element of competitors. The other elements are the innovators in cell therapy. They think about how they can modify the cells. They put T-cell receptors on it. They put a cell load on it. Now, what we are doing, we are combining two research fields, and that is new. And this is, on the one hand, a competency that doesn't exist neither in the device industry nor in the cell therapy industry. So hence we think we are comfortably 5 years ahead of anybody to come up with this, because they don't even have the capabilities to all of a sudden put the cells into a stent lab or put a stent into a cell therapy lab. That's aspect number one. Aspect number two, we have a very broad patent, and this combines our approach how to manufacture the stent and to combine it with a variety of cells. And that is approved. The US patent is already approved. The European patent will be approved on the 11th of September. And therefore, we are very confident that this cannot be replicated very quickly. There's also another element that obviously when we go forward, we want to generate additional patents, and we have very certain ideas how we can further specify the cell and make it a more special cell, because we are selecting cell types that are very prone to generating arteries. And that plus the next layer of protection. And then, as Noel already said, we are already thinking about the next application where we also write the patent. So I think we are a little bit ahead of competition and we are well protected.
Excellent. Well answered. Thank you.
A quick operational question for you, Holger, on the collabs. I believe are the source of they work with the stem cells, sourcing the stem cells. Can you give us a bit of detail about where those stem cells are sourced, where they come from?
Yeah, Cell Collapse is a spin out of the Karolinska Institute. And their whole research process has been founded on about 20 years of knowledge that had been generated as part of the Karolinska Research Institute. Now, at the moment, they have the possibility to generate these mesenchymal stem cells out of bone marrow. Our research project that we have together with them will establish a second manufacturing approach where we can generate these cells out of adipose tissue. We think that is much more scalable, that is potentially cheaper, And that was one of the key arguments why we probably won that this grant, because now we can say we have the electrospinning technology that is scalable. It's currently used in textile industry, so you can imagine the amounts that can be produced. And we have the cells that can also be produced in mounts. And therefore, we are very happy with the grant and with Cellcore Labs.
Sorry, Holger, I just didn't catch what type of tissue is that is potentially usable?
Sorry, that's not tissue. This is our membrane. And the way we manufacture the membrane is with electrospinning. And that is sometimes used also in textile manufacturing. And the point that I wanted to make is that if you can produce a layer for your jacket to make it breathable and waterproof at the same time, we can certainly scale the manufacturing of our membrane, which is much smaller.
Thank you.
Very good. A question maybe for Professor Noel Campos, just regarding the, I suppose, timelines on the first in human trials. You know, could you elaborate a little bit on that and the animal trials? When do you foresee them to take place, and how many candidates will be required? I know you have experience in putting together trials in the past.
Yes, I think what we're talking about in terms of the timeline, those first 18 months, we end up finishing with what's called a CAM assay. Just to briefly describe this, so people, it's been mentioned, some people may not know what it was. It's actually a chicken yolk sac that grows new blood vessels on it, and we're testing out the membrane with the cells on that, because we have a new cell as against the previous proof of concept. They were different cells, and I told you that the previous proof of concept in a large animal model was a prototype. So we're slightly different material, which is patented, and different cells, which are patented. So we have to prove that in the chicken membrane. We believe very strongly that this will be easily achieved. So that takes us out to about 18 months to 2 years. And then at the 2-year point, we'll have planned a large animal study, which will be completed within a year. We expect between 10 to 15 animals per group. And we will decide, depending on the collaborating group, and we have a number of collaborating groups that we can work on, it's most likely going to be a pig model. We've already proven it in the pig model with the other device, so that makes it attractive. And we expect that to be done by year 3. Then we're planning a human study. A first-in-man study usually involves about 10 patients. And then if you're going on to the pivotal trial, based on benchmarks in the field, we're talking about 200 patients. So first-in-man versus pivotal trial, in total, that will cost us about 25 million euro.
One final question from just the investor base again is around, I suppose, the valuation and the fact that NLC, a venture capital player of note, is investing in this round. Can you give us a little bit of detail about how they underpinned their valuation at 5.3 million? You know, what went into that calculation?
Yeah, it had 2 dimensions. One dimension, we NLC looked at comparable data from PitchBook. So we benchmarked various companies for a seed round for the US market, the European market, the medical device market, and the cell therapy market. And given everything that, we actually came out with a valuation that was significantly higher than 10 million. We then benchmarked against market conditions. So I understand that some people in Ireland feel more comfortable with the seed round valuation of 3 million. We personally think it is inappropriate for our work for mainly 2 reasons. Number 1 is the work that went into the foundation of the company is easily a research program that spans almost a decade with Noel. And that I think has to be evaluated at one point. The other part is that we have a significant market. Is it 20 or is it 14? I let it you decide, but it's a substantial market. And given the fact that the underpinning disease is atherosclerosis, it's anything projected but to grow. And then we have not really told you that, but we are happy to explain that a little bit further. We think that we have here a fundamental problem that we are solving. How do we get large quantities of cells into any part of the body where they can do exactly what they are supposed to do? And with that, we have a platform technology that we can roll out in different indications. Now we start with critical limb ischemia because that's where there's a significant medical need. And there we have the model, but we have other ideas. And I think that is also worth a penny. Or to put it the other way around, personally, I think you get a bargain.
I think it's an excellent way to finish proceedings. Professor Noel Kaplis, thank you very much. Dr. Holger Muller, thank you. I think that valuation explanation is very interesting, and I think for private investors that can avail of EIIS tax rebates, that 5 million and a bit valuation for you on a 50% rebate, that's actually half that valuation. So an outstanding opportunity on a valuation basis to get exposure to a highly credible PhD, multiple PhD team with a huge market need, a medical need in the lower limb ischemic market. And finally, I think the most recent validation of the innovation that ProVascTec is bringing to the market is this huge backing from Horizon Europe, the Eurostars program. So thank you, everyone, and thank you for the questions. So I will ask Holger and Noel to turn off their cameras. And if I could ask Tom Cotter from OceanR to step up. I'll give you a quick intro. We don't have to talk about Spark again, but I do think OceanR, for anybody that's on the call who hasn't looked at the OceanR video, one of the best I've ever seen in terms of pitching both idea, but a very real product that is generating 3.5 million euros of annual revenues. It is a sustainability pitch around really, I suppose, high-end branded activewear. It's a big market, but it really meets a need for many corporations that are trying to, I suppose, earn their sustainability spurs. There's a lot of greenwashing out there, but OceanR has a unique, or not a unique, but a very strong advantage in that it is what we call a B Corp registered company. So it meets the highest levels of validation around it being a sustainable business that is manufacturing and designing premium activewear for the marketplace. The logos or the companies that are associated with OceanR are to die for. You've got the Waldorf Astoria, you've got Radisson, you've got 40 luxury yachts, a cruise. You have even Richard Branson's Necker Island is a color, and these are and again, I would say if you've watched the video, you may want to have a look at the gear. It's superb. It's already made quite an impression on people, those that have gone to the trouble of looking at it. But I'll leave the details to this great operation to. And without further ado, if you can just throw up the slides there, I'll leave it to you. Thanks, Tom.
Can you see them there, Gary?
Can indeed.
Yeah, appreciate the introduction and delighted to be here. You've given us a good intro, but just to recap, Tom Cotter is my name. I'm the founder and CEO for the last 5 or 6 years. We, as Gary has indicated, we're an eco-friendly textile and garment manufacturer that specializes in repurposing post-consumer and ocean waste into textile and then into garments. We We launched in 2018 and we've grown the business, I think, year on year, surviving things like COVID and the war in the war in Ukraine, where our factory is quite nearby. So we're in a very strong position currently, and we're looking now to take the business to the next level. As Gary had pointed out, we're a B2B business. So the best way that I can describe our USP is kind of setting the tone for what is available in the market currently. So if you're a resort, you're a super yacht, you're a high-end corporation, and you're looking for bespoke clothing, what's on the market at the moment is either your local print and embroidery shop, where a lot of companies will go, or if you want to go into the higher level of customization, you end up looking at MOQs, or minimum order quantities, of 300, 400, 500 units, which is just not attainable for a number of organizations. You then couple that with the fact that a lot of these really large brands these days are incredibly worried about their brand reputation. You think about people like the Four Seasons, Richard Branson's home on Necker Island. They cannot be, I suppose, under pressure to be partnered or linked with someone who's doing it with their clothing or their uniform in unethical fashion. So that's where we've stepped in, and we've now got, I think, a fairly unique value proposition, where we work with only eco-friendly materials. We then have a very low minimum order quantity, and we offer full customization across over 200 products. The way we look at it from a sustainability point of view is we have three main pillars. So it's people, product, and planet. And as many of you, if you're familiar with the sustainability and the ESG targets at the moment, it's a very, very broad topic. And when we go and speak with organizations, it's quite difficult to even figure out which of the ESG targets that they have at the top of their agenda at that point in time. Primarily, most people go straight for the fact that, you know, a lot of the fabrics is made from recycled plastic bottles, and that's an incredible story. But as many of you will probably have seen, more and more brands are actually using the recycled material. And it's now, for us, it's nearly like a commodity product. Whereas when we started 5 or 6 years ago, it was very, very difficult to get your hands on. And for me, I think I put them in these order. We have people at the beginning, because for me, there's no point in making something out of recycled plastic bottles if you're actually going to be using a unethical way of producing that garment anyway. So we have 56 seamstresses that we work with in Latvia, and they are all paid well above minimum wage. We actually have a small waiting list of 10 or 12 seamstresses currently that would be looking to join the organization, because it's held in such high regard in Latvia. We then look at the product, and obviously the recycled plastic bottles is a fantastic claim, but we then do a full life cycle analysis on these products as well. So a full life cycle assessment, where we can give a QR code to track the amount of carbon in your product, the amount of water consumed, the amount of miles traveled, the people that were involved in the process of making it. We then offer a take back and repair program. So if you, again, are a hotel or a super yacht or an organization, and you've been working with the garment for the last 12 months and it has lost a button, we can take that back and repair it. We then look at the planet side of things, and it's a huge part of our business, is giving back to our oceans, hence the name. So we will work with a number of non-for-profits around the globe, mainly paying fishermen to collect plastic from while they fish around the Mediterranean or in Kenya. And then we also have our own OceanR mangrove forest, where we plant about 400 mangroves on a monthly basis. In regards to the history of the company, we've had a roller coaster of a ride. Typically, when I sit down and explain the ins and outs of it, are fairly blown away, and it's just from the struggles of the hospitality sector in COVID, coupled with us going through an acquisition of a factory in 2023, just as the war was kicking off between Russia and Ukraine. And we've survived all of that, and we've still grown the company about 190% in the last 2 years. We're on course to do 3.5 million this year, and we're at a break even level. Burn rate, I think the last couple of months has been about 20k, and again it does fluctuate to, you know, we might have a profitable month but we come back down. So we are looking at a break even point in our sales team of about 260k. And just to give you an idea of the sales currently versus August last year, we would have done about 45k last August, and this August we're on course to do closer to 250. So the growth is incredibly positive, and that's just basically down to the build up and the structure of our sales team. Here's a couple of visuals for you just on some of the products that we work with. We have a consumer collection that we do very, very little for, but it is there, and we do have some retailers that take us up on that offer. Panda Island is a beautiful island down in Africa, and they use us for their retail collection. One of my personal I suppose my favorite customers is the Four Seasons in Orlando, and for me it's one of the kind of pivotal moments that I knew we were onto something. For me, you know, Florida is probably the home of merchandise, and to think that we have a Four Seasons in Orlando where they could walk out the door and pretty much get hold of any product that they require, and they've been working with us for the last 3 years and building every year, which is great. We have Shedi, which is in Montenegro, and one of our largest collections in the last 2 years is an Arctic expedition company where we do their jackets, and that order is around 500k per year, and we've just spoken to them this week, and it looks like it's growing. Well, we have it for the next 3 years, but it's going to be growing in value also. Waldorf Astoria was already mentioned. They flew us out there about 2 months ago, and we took the chance to shoot the video. They basically brought us out to tell their sustainability story. They hold us in such high regard that we're, you know, one of the best in class to be able to tell all the initiatives that they're doing. And one of the more recent events that you guys would have all been very familiar with is we were contracted to do the sailing apparel for the Olympics, which was again great exposure for us, and just shows, I suppose, the level of events that we're getting brought into. In terms of sectors, put it all on one page, we do position ourselves obviously with the luxury resorts. We work with maybe 100 of the highest end luxury resorts around the world, and it could be as little as a 5k order on a yearly basis, right up to doing Necker Island. Richard Branson, they typically spend somewhere between 70 and 100k with us year on year. We then have the super yachts. You're talking uniform, guest giveaways, even if a lot of them do a lot of merchandise now as well for the boat when people charter it. We have the corporate world. We have events in the marine sector. But two of the main industries that I'd like to talk about is the expedition industry is an enormous industry where people are paying north of 20,000 euro to go and see polar bears and penguins, and a lot of these businesses provide the parka jacket to go on the trips. We have 2 deals that are currently in play. One is for 200k, one is north of about 700k, and we're just waiting basically to hear back from them at the moment. And we really see that as one of the high growth industries that we can focus on. And healthcare is another one. And healthcare has always been in the plan, and we've been working with a number of companies for the last 18 months. And we closed a deal in March this year for one of the leading private hospital groups in Dublin. I can't announce the name just yet, but that's due to be public in November. We just up there last week doing all of the size runs for the hospital. This side again has been mentioned. You'll probably recognize a lot of these logos. We primarily are focused on export. We don't have a huge amount in Ireland, but we're just looking at setting up relationships in Ireland at the moment. And one of the key things on our growth at the moment is actually finding the sales reps in the geographical locations to help drive into that industry. So whether you're focused on marine in the UAE, and we need to find the person who's focused on marine in America. And we're already now having conversations to onboard north of 6 of these sales reps, which are a commission-only kind of contract. Again, we'll be sharing the deck afterwards, and these are just a number of the testimonials from the various brands that we work with. And in terms of our team, we have a management team in Cork that is myself. Christine has been here with me. Tim O'Leary is after returning home from London, who's ex-Louis Vuitton. Christops is our sales and supply manager over in the factory in Riga. And Kira has come on board recently as our financial controller. Pat joined me as an early investor and has given me kind of 2 days a week, I think every day, every week for the last 4 years. And like I said, we have a very, very skilled team in Latvia, where it's an ex-Adidas factory. And we have a team of about 55 people that are based in Latvia that do all of our low volume production. And then they work with a lot of outsourced contractors if we need to do higher volume or more technical garments. In terms of the size of the market, I won't bore you with the big figures. There's figures of 280 billion being floated around. For me, a firm focus on that 100 million revenue of the really high-end eco-friendly B2B market. As you can tell, we're only a portion of the way there, but I do genuinely think that we have a very good opportunity to take a sizable chunk of this market. And in terms of our growth, like I said, goal is 3.5, building up to a 27 million over the next 5 years. These figures might seem high, but just to give you an example of some of the conversations we've had over the last number of years, we've been involved in a tender process this year for the Irish Army, and sadly we didn't get it due to the size of the company, but that was north of 14 million in revenue. We were also brought into a conversation with a public company that rented uniforms in the US, and they wanted to move to a sustainable option, and they wanted 180,000 polo shirts at €12 a garment, again coming in north of 12 million. And in terms of reasons to invest, I think we're on a very good trajectory. We tend to double, if not slightly under double, the revenue year on year. We've got a very structured and dynamic sales approach at the moment, and we're looking to raise about 400 to 500k in this round, building to do a Series A hopefully by the end of next year, which would bring in about 4 million to 5 million to help us build it to the next level. So slightly over time, but I'll happily answer any questions.
Thanks a million, Tom. If I can ask Fergal to step in there if he wants to. There's plenty of questions.
Great presentation. I suppose just one question that just came in first is, what do you feel is the biggest kind of challenges for scaling OceanR, given potential economic risks and downturns, as you're focused in the high-end marketplace, and how do you kind of plan to maybe alleviate these?
I suppose taking out, we're probably in the peak of the economic downturn, but when I look at scaling it, we always have to think of 2 options. So one is production, because we now are the proud owners of a plant that we produce in, and the other is on sales. And I think we've learned every approach over the last number of years, and the approach that we have right now is really, really working. So we have a team at the moment of about 6 salespeople in the Cork office, and we'll be looking to build that to kind of north of 10 over the next couple of years. And they're very much focused on account management, new business, and customer success. Again, just referring back to what I said earlier, these localized sales reps are really key to our growth. We have one in the UK that delivered about 800k for us last year, and they're on a 10 to 15% commission depending on the gross margin that they deliver. If I then look at the production facility with our current I suppose, floor plan, we basically have the ability to triple or quadruple the output of the factory. And with just a small, like I would say between 10 and 15 hires, we can triple the output of the factory. The management structure is very much in place, and it's all about just bringing in resources to deliver and produce the product.
Thanks, Tom. A quick question, just in terms of that scaling up around, if we're assuming that the growth rate's slightly below, 100% per annum, but if we were to use a 7 million euro type revenue number in the next 12, 15 months, how does that look like in terms of the mix between what we call recurring revenue, the rollover orders, and the sort of the one-offs? What's the mix that you see happening there?
We measure it quite detailed on a monthly basis. At the moment, we're about 70% recurring and about 30% new business. I personally would like it to be closer to 50-50. But the return side of our business is really, really good. And I think that's just with the portfolio of products that we have. We've introduced, a kids collection. So we have a if you think about a resort, the amount of departments that you have access to in a resort is, you have food and beverage, front of house. You'll have the recreational team. You'll have the ground staff. You then have the golfing. You then have, events. So we slowly get the foothold in, and then all of a sudden the growth for these accounts seems to be fairly straightforward, where we have a gift box that we basically offer the person that we are dealing with currently to send it on to any of the I would suppose the internal departments or any sister properties that we have. If we look at the Four Seasons, we approached the Four Seasons over the last 18 months. We had about 6 of them 18 months ago, and now we're up to about 54 out of a total of 154. So as soon as we get our foothold into a brand, the ability to scale is quite impressive.
Yeah, I just might add something to that. Pat McIntyre, just to haven't been introduced myself. I'm a director of the company with Tom, and an early investor, as he mentioned. I think a very important part of our vision in terms of mapping out how we grow our business. It's certainly the drive for new business all the time, and a lot of our drive is happening on what we call the enterprise, which are the larger projects such as the Poseidon Arctic jackets, and a project we've just secured with the largest supplier of diving equipment in the world, Scuba Pro, which is probably worth about 1 million over 3 years. So there's a number of things. One is that we focus on the customer to retain. So we focus on the recurring revenue, regardless of whether they're 10K sales recurring over the year or over years, or whether it's a 500,000 deal. With the larger deals, we're looking at tying into 3 to 5 year contracts. So we're keeping that continuity with larger deals. So our growth is about winning business, retaining the customer, growing with that customer to max them out, and then bringing on new business all the time. A lot of our new business is going to be larger business. So some of the contracts we reference. So currently we're actually in discussions with 2 million of contracts. We'd expect by the end of the year we're actually talking to customers in the region of 5 million of contracts. So our brand has opened out much wider over the last let's say 12 to 18 months, and so it's about growth, but it's about retention as well.
Thanks, Pat, and apologies for not introducing you in the hurry to get going. It was a little bit of time constraint, but my apologies. And if I could just actually stick with you, Pat, just around the numbers there, and you're talking about the big orders. I'm conscious of the number that was mentioned as a potential Series A of about 5 million euros. And then obviously the manufacturing facility you already have. I think you talked about that having a sort of 3 times more capacity. What that equate to in terms of a revenue number, and then, clearly on the numbers you're talking, you could go through that capacity quite quickly. So what's next step on the manufacturing capability side of things?
Okay, it's yeah. Right now we could produce 10 to 15 million right now, because what we've one of the big advantages we have in terms of taking our factory is it has its own production capability, probably up to 10 or 15 million. But what it has with us has the ability to actually outsource larger volumes to other similar factories and larger factories around the world, and similar size factories. So we have already our partners in place to significantly produce. So if we were to win orders to bring us to 15 million, we actually can produce that right now through our partners that we access through our current factory base. So we have no in terms of supply chain, we're in a really, really good position. Is that the core of your question?
That absolutely is. Yeah, no, that's great. And I am conscious of time and our contract with people to free them up by 2 o'clock. So I'll leave. I have one final question, that the perennial one. What does an exit look like to the Spark investor and to yourselves? Timeline and type of, I suppose, acquirer.
At the moment, my gut, and I know it's only a gut feeling, one of the big contracts that Pat has pointed out is for a public company in the US, and we have a retainer with them at the moment where they basically we design, manufacture, and we do all of their R&D for them. And we've actually taken their production from China back into Europe. So that was one of the requests and one of the things that they were seeking out. So that was a positive. They're very acquisition heavy because they like consuming brands that can also give back to the parent company. So they've already floated the idea of, if we get to a certain scale, that they would be quite interested at potentially coming in, obviously, if everything was going the right direction. So again, just to point out, we would help them with the design, the R&D, the low volume production, and then have the ability to, as Pat pointed out, work with a number of larger production facilities if we needed to go to them.
Yeah,
Thank
so
you.
I think the opportunity for the Spark investor and every investor actually so far could happen within 3 to 5 years. It could happen as a partial trade sale. It could happen as a major investment. It could happen even as part of an A round where we're expecting to get a much more value as we move up the volume curve. As we move up the volume curve, we're significantly enhancing our net profit. So we're going to be a very high net profit company, very attractive. So we anticipate that either another round could buy out some of the shares or a trade. Some of the big trade guys that we're actually engaged with across the world, because that's very important for people to understand, is we are all over the world. So we're coming across a lot of companies, customers, distribution networks that really have an interest in what we're doing, and we're doing something that they're not really doing or not able to do themselves. So we see it as that partial trade sale, full trade sale in the next 3 to 5 years, and that could be part of a major round or a sale, as I've outlined. Yeah.
Thanks, Pat. I think we're going to leave it at that. Well done, everybody. Thank you to all our attendees, and thank you for your questions. For OceanR, I think you finished nicely on a global point. This is a really, fee in terms of the space you're in. You're already global, 70 plus countries. There's a lot of revenues there. There's clearly quite a few orders in the pipeline that look really interesting. I think execution on both the sales and on the manufacturing, the design side is again highly unusual at this stage. So well done you. I think it's an EIS qualifying investment. As I said at the beginning, look at the video, and I think that the presentation has itself extremely well. Thank you to our ProVascTec presenters as well. As a final sort of message to the investors on the call, we're conscious that we obviously, as a business model, we have great opportunities. There's always 2 or 3 investments on the platform. We've the best flow in the country by a mile, but we do need our investors to play ball as well, in terms of there are timelines to raise monies, but it would be very helpful if you actually express commitments that are, if there are large amounts, early, but get the payments in so that we get a real feel for a book build. I come from an institutional world. If we don't get a picture, it's difficult. But what happens then is we stop showing people what's going on, and it's and nobody wins on that situation. So it's a request. People can play ball, but if you can express interest or come back with feedback or actually pull the trigger a bit earlier, I think everyone wins on that basis. So thank you, everybody. and have a nice rest of day. Thank you.
Take
Thank
care.
you.